Sal Ternullo, today you had a keynote speech at the Nordic Blockchain Conference in Stockholm, and you had some message to the Nordic community about the state of crypto and Bitcoin related, for instance, to institutions. And what is the status today?
Yeah, I think, and thank you for having me. I think the main point of discussion today was that we're past the tipping point to institutional adoption. The core drivers of that being the proliferation of stablecoins to scale, the accelerated tokenization of different types of traditional products. I showed a couple visualizations in terms of those two categories, stablecoins as it relates to traditional payment rails with updated data through 2024, and then tokenization specifically as it relates to tokenized money market funds, which are approaching 7.5 billion in a growth curve that VCs love, which is a hockey stick. Also talked about regulatory clarity. Yesterday was a huge day, specifically in the US market, but also globally as it relates to stablecoins, with the Genius Act moving out of the Senate in a 68-30 vote, now to the House for discussion, revision, and then hopefully prior to August recess of US Congress to the President's desk for signing. So it's a cumulative impact of these different factors: adoption of mature technologies, regulatory clarity. And I joked in that conversation that we were not as progressive in advancing a regulatory framework as the EU was. So yeah, those were kind of the core themes that I covered this morning. I think it was relatively well received by the group, and interesting for folks to compare and contrast a US perspective versus the EU and the Nordic region.
If we just look a little back, what has got us here? What has changed for the last 1.5 years?
I mean, the biggest factor in change is clearly the political environment in the United States. We lived under a regulation by enforcement approach in the absence of clear rules and guidance. There was leadership changes, obviously through the US election, and then subsequently through appointees to key roles within the SEC, CFTC, and it's been a 180-degree shift. So I use the frame of terms that we went from regulatory headwinds to regulatory tailwinds. And so within 6 weeks of time, or a little bit longer, we saw more progress in key regulatory factors, specifically around the repeal of SAB 121, which was SEC guidance prohibiting banks in the US from custodying crypto through some draconian accounting rules, and then also some OCC guidance that was outdated as well. So the new administration has had some points that I support in terms of regulatory progress. Obviously some stuff that is on the side of the industry that's more speculative in the meme coin space that I'm less excited about, but on a net basis, we've moved the needle forward in the largest capital markets in the world, which I think is net beneficial for everyone in the Nordic region, in the EU, ultimately in Asia as well.
Is it correct to say that you today talk to the crowd, I mean to the community, the believers, and what about the people outside of this silo, whatever you call it? Are they realizing what is happening?
Yeah, I think there's an increasing awareness and awakening as we're starting to see mainstream considerations around these things, and specifically in the US. Like the announcement in executive order regarding a strategic Bitcoin reserve was a pretty eye-opening moment to American people to think about gold on the balance sheet, traditionally backing a fiat currency, to Bitcoin as a digital store of value. And I've seen the same thing in the conference attendees here today. Even folks that are not deeply engaged in the industry for a long time are no longer asking the same questions around, is Bitcoin used for money laundering? What are the benefits of stablecoins? These things are pretty well understood at this point. So I think the common understanding has been raised just through time and saturation of education efforts.
Maybe in a couple of years, we believe that maybe Europe was moving ahead because of the MiCA, and you had the discussions and you had the law enforcement in the States. But what is the status now? Are we in Europe and the Nordics getting behind?
I wouldn't say necessarily getting behind. In the first go with MiCA 1.0, it was a relatively progressive step forward that was arguably, there was a couple locations in the Middle East and then Asia as well that were on a similar kind of playing field in terms of progress. Even 2 years forward, the pace of change in technology is quite fast. And so I would say that there are certain provisions within MiCA, specifically as it relates to stablecoins, that are prohibitive to some major stablecoin issuers, specifically Tether and USDT, operating in the region. But I think that the market experience over the past 2 years will inform MiCA 2.0, and I do believe there will be pressure from an economic growth and prosperity perspective to advance and solve some of these issues. So I wouldn't say falling behind, but I would say there is a sense of urgency to push forward and advance the next iteration of these regulatory considerations.
So what should a modern investor think today then? Should they invest in Bitcoin, ETFs, or in Bitcoin Treasury Companies, or in other types of assets?
Yeah, so this is a question that I'll fall back onto institutional financial advisors. Yeah. Nothing I share with you is financial advice, but there are multiple large institutional allocators and asset management firms that are recommending a place for Bitcoin within a diversified portfolio construction. You see Fidelity making recommendations between 3 and 5% of a portfolio to be exposed to the asset. They're not providing recommendations as it relates to leveraged exposure, as would be strategy or other plays in that category in the digital asset treasury space. But I do think if you look on a 10 to 20 year horizon, it would be prudent to have exposure in your portfolio in a manner that's consistent with your risk appetite. So if you're younger and earlier in your career and you have a higher risk appetite, maybe you skew towards a larger percentage allocation in your portfolio. If I'm nearing retirement and I have lower risk appetite, I want to preserve capital versus generate returns, then I probably have a lower exposure. But I think we're approaching the point where the survey that was presented this morning, next year will probably be a pretty momentous shift in an upward adoption curve. So I'm excited to see the survey data that comes out for 2026.
In the Nordics, you mean? In
the Nordics, yeah. We saw some big step-ups. Finland in particular was a pretty wild change year over year. But I would expect that some of the lagging countries like Sweden probably have big moves next year. So,
what do you think about the buzz for the last couple of months, the Michael Saylor effect, where people are starting companies buying Bitcoin to have on the balance sheet? Is that also becoming a risk because everybody is sort of moving ahead on this strategy?
Yeah, so there was a discussion in the panel today amongst several exchanges, I think OKX, Bullish Global, and then a couple of local exchanges as well, that were discussing what are the risks related to digital asset treasury companies. And the reality is that the risks relate specifically to the capital formation and debt instrument constructs that they're using to form capital to build a balance sheet position for Bitcoin, and also other assets. And so the risks are unique to the company, the financial strategies, and the underlying asset holding. In the context of what strategy has done particularly is take a long-dated view based on historic 15 years of data to say that if I date these convertibles at a strike price of X, which is priced today, on a 3 year horizon, there's been no circumstance where those notes ultimately get converted. And so what I would say is each of these digital asset treasury companies will take different financial approaches and have different underlying holdings, and they need to be assessed from a risk perspective independently. I do think on the positive side, it's creating a structural shift in the buying behavior of market participants for Bitcoin and now Ethereum and other assets. On the risk side, the cumulative effect of these different financial strategies do lead to risk in the space. And so ultimately it's up to investors to discern what is the risk profile of strategy versus what is the risk profile of 21 versus another digital asset treasury company. And I think people are heightened in awareness towards risk in this space where they're going to be sensitive to this issue. So I'm hopeful that capital markets ultimately discern the more constructive financial engineering approaches from those that present higher risk and ultimately price them accordingly.
Are you aware that there are 5 Norwegian and Swedish companies that are following this strategy rather aggressively? 2 are going to be listed on the stock exchange and 3 of them are already listed.
Only as of yesterday's conversation over cocktails did I hear about this, but I expect this will probably start to percolate up in the global media scene, right? Mm-hmm. There's already beginning a narrative largely out of Japan with MetaPlanet, other Japanese companies doing the same, and so I expect that these companies that are taking the approach in the Nordic region will be highlighted as well, and there probably will be a point end of 25 where we look at a global map and look at all the different listing venues for traditional equity companies, and it's lit up with companies that have corporate balance sheet positions in Bitcoin.
And if you come back to Nordic Blockchain Conference 1 year from now, and we have maybe new numbers regarding the consumer adoption. What will be the headlines on the institutional side, do you think?
Yeah, it's a good question. I think next year, if we zoom out 12 months, the example of JP Morgan, doing their first stablecoin transaction on Coinbase's Layer 2 base blockchain will be one of a dozen banks on a global basis. Generally speaking, I think there's a little bit slower adoption curve in the Nordic region on the banking sector side. From a protectionist perspective, I think, very, very high net wealth, high GDP per capita, a lot to lose when you're in a position like you are in the Nordics. But I do think we'll have more than a dozen bank-issued stablecoins by the time I'm back in 2026. I think the consumer adoption survey will see larger than 24 to 5 year-over-year increase in adoption metrics. And honestly, I hope that the community is just as vibrant as it is this year. I didn't expect the attendance today to be as large as it is, and diverse stakeholder groups as well. So,
thank you very much then, Sal, and we welcome you back then next year.
Sounds great. Thanks, Martin.